Chakri, so good having you. Thanks for taking the time out. Neeraj here, good morning. What's your sense, Chakri? We've kind of throwing caution to the winds of sorts in the last few days. Even though the last week was flattish, there were more gains than losses, and we're building on from there. What's your sense on the markets?
Good morning. Thanks for having me. Yes, indeed. Banks are continue to remain a favorite. We will simply because today the narrative is changed in terms of it's all about valuations. Now, even if you assume loan growth to fall down to very low levels, to the very low single-digit levels for the next couple of years, and assuming that the GNPAs spike from here for the next 3 quarters. Even if they go up by about 30–40%, adjusting for that, the valuations on a price to book for companies is still looking attractive, given that growth at some point in maybe FY22 and beyond will come back. And you have many of the NBFCs today trading at very reasonable valuations after a long time. And of course, frontline banks are also attractive.
Some results are going to come out today, Chakri. IndusInd Bank, Axis, if indeed, I'm just wondering, if indeed the quarter four numbers, delivery is slightly better than what the brokerages have penciled in, do you reckon that there could be a positive move, or would the markets, or should the markets largely discount quarter four as things gone by? What will happen ahead is probably completely different from what has happened in quarter four.
There will be a certain amount of confusion in terms of the numbers, simply because even if you look at the quarter just concluded on 31st March, it was business as usual until about the third week of March. That's when the lockdown came in. And it's only post that, so which means largely the quarter, for the whole quarter, would have behaved the way it would have anyway, with or without Corona. So the Corona impact is in for the fourth quarter is just the last maybe 10 days or so. And then now going into the first quarter of this year, April clearly has been a kind of a lockdown situation, and May will partly reflect that as well. So, the reflection of the just concluded quarter's results is not a reflection of what is likely to happen over the next 2 quarters, and next 2 quarters are likely to show worse off results than what has just happened in the last 2 quarters.
Okay. Well, Chakri, there is a lot of confusion about the kind of news flow coming out from the insurance companies, isn't it? I mean, Friday we had this updates from those insurance companies, and they didn't seem to be too positive. The numbers from ICICI Prudential looking rock solid, and the stock is reacting very, very positively. Maybe some bit of short covering as well, but you have to admit that the management to express some confidence. What's happening here?
Yeah, I think again, this is also a sector which will reflect a fair degree of confusion. There will be some stoppages of policies without a doubt, and some of the management caution is probably reflecting that. And this quarter, in this current time period, there has been a lot of anxiety among employees about their job outlook and their job safety. And so some of the policies which they were taken at their own discretion, they will try and cut back expenses, and that's partly being reflected. But, the stock's reaction reflects that, when all this dust settles, then life will be hopefully back to normal. And I think that is what the stock reactions are showing.
Would you be a buyer in the insurance place?
Insurance, I think I'll stay back here a little bit, simply because the valuations, while okay, I think they're not cheap enough. In frontline banks and frontline NBFCs, on the other hand, in the financial services space, the valuations are looking good, recognizing that they'll be hugely volatile because the next 2 quarters are likely to show fairly bad results.
Okay. That aside, Chakri, we got some very positive commentaries from some of the specialty companies, Aarti Indus growth numbers, etc., and all of that. These are not stocks that have correct now. I mean, they've recovered a bit, so and now they're not too far away from their all-time highs also, but they're expressing confidence. Should one buy into them?
I think yes, one should buy, and in fact, we are buyers. And all the names that you mentioned, RT Industries, Sudarshan Chemical, all these companies are in leaders in their own segments. These are companies which already have a fair degree of export revenue, so they know how to work the supply chains outside India. There has been disruption for well-known reasons because of Corona and an increasing a move by companies to diversify away from one country, China, to other countries. And from RT Industries, Sudarshan Chemicals, all these companies are well positioned to gain from that disruption. And these companies, will gain from a higher volume. And these are not high margin companies, but the volume wise, I think they'll gain a lot. And in terms of the next 3-4 year growth rate projections, and also importantly, I think in a low oil price environment, at least for the next couple of years, some of their input costs, which related input costs, have also come down and will stay low for the next couple of years. So yes, these two are good enough reasons. With top line accelerating, a moderation in the costs should help the stock performance.
Okay, that's one more point. Now, Chakri, are you wary of making large fresh investments in pharma because of the run-up and the manic run-up that these stocks have shown already?
Good question. These sectors have underperformed. There, it's clearly a stock-by-stock approach. For instance, Glenmark is up about nearly 40-50%. But even after all that, its valuation is still trading at under 10 times FY22. Now, that is a fairly low multiple for a company whose earnings growth is fairly visible over the next couple of years. Yes, Glenmark has had some amount of execution issues. So even though the stock has run up 40-50%, there's still adequate room in terms of valuation. Now, the same story can repeat itself against various other companies. Jubilant is another example. And you have numerous examples over there. And so the valuations are not expensive in spite of the run-up in some of the names. And we would continue to buy because, mind you, as you go into next year, about 6-8 months down the road, there will be a need for huge amount, a therapeutic need for various kinds of treatment for corona, because corona as a disease is not going away. It's just that the vaccine and therapeutic treatment will become the norm. And at that point, a few billion doses will be needed some 6-8 months down the road as a preventive, as a therapeutic in various categories. And all these companies across board will benefit with the ongoing work that they're doing in this, in finding some kind of a preventive or a combination therapy to corona.
Okay, so well, that's the other thing to monitor. Chakri, I'm wondering, where is it that you have the confidence of putting in big money to work? If you
I think
putting big money to work right now.
Yeah, I think it has to be an incremental approach. I would think simply because it's not that everything is done and dusted and we all go higher from here. This is going to be a market over the next several months, which will see a huge amount of volatility, but hopefully that volatility will be on the way up. And so staggering investments is clearly, I would think, the way to go. And where would we put the money to work is clearly here at this point is more bottom-up picking because individual stocks are down dramatically. But if you have to look at space, yes, autos as a space, whether you look at Hero Moto or Maruti, these are companies which are reflecting hardly any growth for the current valuations. That is, if you look, if you do an implied, what does the price imply? It's implying hardly any growth over the next 7 or 8 years. Now, that is an unrealistic assumption. So, these companies will at least grow, if not in line with GDP, slightly lower than GDP. And so, yes, so their autos as a sector looks good. NBFCs, there have been various worries. Take Frontline, whether it is Cholamandalam or Mahindra Finance, worries about, what happens to their GNPAs. But the evaluations kind of reflect that. So incrementally, we will nibble at these names, and I think that's the approach that we are on.
Okay. Well, as we speak, by the way, ICICI Prudential and HDFC Life, both of them well and truly in the green, so really good going. Keep those stocks on your radar. So insurance is looking okay. From amongst the large cap space, banks are looking fine, financials at large. Cipla is the top gainer. Sun Pharma follows suit, so Pharma rally continues. The ones which are lagging are Power Grid and NTPC. Not surprised there. There's some flattish move in ITC and HUL, so do watch out for those two. Bajaj Finance, Bharti Airtel looking slightly flattish in trade today as well. So that is the other thing. Chakri, one final question before we wrap up this conversation. It may become a stock specific question simply because there are only two players. But if somebody doesn't want to buy a Reliance Industries because of the run up that the stock has shown, can you still play telecom in India? Would you believe that Bharti Airtel still gives you a viable, good value from an investment perspective, from a really long-term perspective? The stock may well dip from where we are right now.
On a separate note, and since you mentioned Reliance Industries, I think Reliance Industries is a buy, even at current levels, simply because the number of avenues of growth that they have. Now, going to Bharti, Bharti still has a huge amount of debt. It's not that it's a super duper healthy company. And a lot of the ARPU increase and data increase that is expected to come about is kind of expected, and for them to move towards break even. The stock has done decently well. And so I would not really be a big buyer of Airtel at current levels.
You want to give us your thesis on Reliance since you believe it's a buy?
I think so, because Reliance Industries have multiple avenues of growth, and the new avenues of growth include not just geo, but also now the platform, the online platform, which will rope in a huge number of small businesses and which can snowball into a fairly big thing. And WhatsApp also provides payment gateways. Reliance Retail is executing really well. So if you do a sum of parts of all of these various businesses, I think it's clearly a stock which has a lot more upside levels, even left from the current levels.
Okay. Chakri Lokapriya, we'll leave it at that. Thank you so much for taking the time out and speaking to us today at Bloomberg Quint.
Thank you so much.